Hey everybody, Gary with Basecamp Trading. Let's take a look at crude oil. This is our 30-minute chart. You see that crude oil really just started moving its way lower yesterday. This was yesterday morning, and you can see crude just started moving lower. You started making lower highs, lower lows, traded lower through the Asian session, traded lower through the London session, and it actually came into the US session a little choppy. This bar was the Ghost Pit Open in the US session, and you had an inside doji, and this actually triggered to the downside. And crude made a pretty decent move lower, and then it was followed up by a really bullish move back the other way. You left the bottoming tail, entire body of the bar was all buying, pushed up here to the 21 EMA, found resistance. Next bar open, pushed a little higher, found resistance at the 21 again, then left the topping tail and ended up being a really bearish bar back the other way. The entire body of that bar was all selling. Set up a what could have been a potential reversal doji. If the next bar had triggered this bar back to the upside, that would have been a reversal doji back to the upside. Ended up being a continuation doji down lower. And ultimately, and again, it wasn't real easy move down. This was a very slow move down into our target. Our target was initial target was down here at 63.47, and you could see this wasn't just a perfectly smooth run. Lots of tails, push down, pull back, push down, pull back. You could see, but ultimately, slowly traded down into our target. This is what that looked like on the Renko chart. And right here is where that continuation doji triggered in. And that triggered in at 64.11 was the low of that bar, which was that continuation doji right there. Low of that bar was 64.11. And right here's where we had our Renko set up. Fast line, zero touch, triggered in the continuation doji, and then that was just kind of a slow move lower. I mean, that bar actually triggered in at 1040, and we didn't come down here and hit our target until like 1120. So it wasn't just a quick move down, but it was just a slow kind of steady grind. Little pullback. You can see the wick right there, another wick right there. So this didn't just drop straight down into our target, but our initial target was 63.47. We ran down into there, ended up making a pullback, set up a wick off the 18 right there, and traded down into the second target, which was 63.13. And where that came from was here on our 240-minute chart. You see the 200 EMA, right there, 63.13. And we know, especially on the 240-minute chart, that the 50 EMA and the 200 EMA are significant support and resistance. And so we know with a pretty high degree of confidence that if we get down to the 200, that's definitely an area that we can expect a price reaction. It's very, very rare you blow through the 50 or blow through the 200 EMA. On top of that, you were significantly undervalued as you were hitting the 200. So that was definitely a good place to, at the very least, tighten stops and look to take profits. Because again, we know that that it's a high probability we're going to get a reaction at the 200 EMA, especially when we're significantly undervalued on our value charts. And as you can see, crude has been bouncing out of that area. It hits 200, bounce, went down, retested it, and is bouncing again now on divergence. You had divergence when you hit this initial touch, and then on that secondary touch you had additional divergence, and crude is bouncing. But again, we know the 200 EMA on the 240-minute chart is definitely an area that it's reasonable to expect a price reaction. But still, some pretty nice opportunities in crude. You had an opportunity to grab at least $700 per contract on this move down, and then you had an opportunity to grab another $300 per contract on this move down. So definitely some nice opportunities in crude and a slow move into target.